The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you. Oh, okay. Thank you very much for being with me this evening in the United States and Canada. Wonderful to have you. And also in Panama, Michael B is down there. And he's a tutorial guy. He does get around. He was heading for Switzerland last I heard. Anyway, that's grand, Mike. I hope you're well, your family's well. And we've got Mickey D with us as well. So it's good afternoon to those of you in the beautiful sunshine state of Queensland in Australia, where the sun is always shining. And I should say, we're supposed to be having a El Nino event, meaning hotter and drier. And I think we've only had one completely dry day since Christmas. It is just wet, wet, wet. Can't get the mower out to mow the lawn. The weeds are 3 foot high. Amazing, amazing. Yeah. Okay. So thanks, Michael. Yes, good start to 2024. It's been super, hasn't it? And very special, Mickey D, to see you soon, mate, my friend. Lots of others here. We've got a few additional people today. We've got a bit more. I guess some of you have been on holidays over Christmas and what have you. Of course, good afternoon. I'll look at across the ditch here. Our friends in New Zealand. Good afternoon. Lovely to have you with us. Brian's with us. David, of course. Many Davids. Doug's with us. He's a new guy. Good to have you. And we're greatly honoured to have Frank de Beer with us today. Frank is our guru who runs the Fourth Seal charts and commentary. And he's written a wonderful article for you for 2024, which we're going to visit shortly. So good to have you, Frank. I know for all you Europeans, it seriously is the middle of the night, so I'm glad you're here. That's wonderful. Greg's with us. Greg Palladini, of course, is with us from California, and the other Greg from Colorado Springs and Texas. He's a tutorial guy and a money manager and a master trader. Wonderful. Harold's with us from Redding, California. Wonderful man. So long ago now, isn't it? Joe's with us. He's new. Here we are. Let's see, I might get a new set of glasses fairly soon. Krishnakant Dana. Great to have you with us. Wonderful to have you with us. Welcome to the Daniel Code, my friend. Okay, so we keep going here. We've got Leo with us up in Canada, in the cold country. Mark L, of course, never a party without Mark. Almost mandatory here. Michael, we've talked about. He's down in Panama now. Mickey D, of course, grand to have you with us. Mike Mitsos, I haven't seen you for years and years, mate. Wonderful to have you here. He's a dentist. He's probably retired by now. It's been so long. But glad to have you with us. Nathan's with us. Norbert up in the cold country of Canada as well. Peter Mack, who's not a day trader. PG, don't know who that is. Petro, glad to have you with us, my friend. And Rudolph, good to have you. It's been a long time since we've seen you, Rudolph. Wonderful to have you. Steve's with us, of course. Todd with us from Southern California. Wonderful to have you all with us, and many, many more. Anthony DD, who used to be a broker, is now a private trader. And he says, hello from cold and snow Chicago. Wow. And Herbert Norbert's further away and even colder where he is, much colder where he is. Okay, so a lot to talk about today, folks. I want to start by just having a look at Frank DB's wonderful article. You'll remember at our last, well, some of you didn't attend, some of you were away on holidays, I suppose, over Christmas and the New Year, but for those of you who were with me, we talked about Frank and how proud of him I am. And he's done a wonderful, wonderful job for us. And he's written this wonderful article. He writes a new article every year. This is his 2024 article. It's just full of wonderful stuff. So let's move on. Everything here is running. Everyone presumably can hear me, or you'd be screaming by now. Mickey D said it's all good, so it must be all good. Okay, let's move on. Here, we say this at the start of every tutorial: markets are rational, orderly, and sometimes predictable. And the Daniel code is a set of proprietary ratios that control time and price in all markets. And if that sounds like spin, folks, it isn't. If you are a person who is interested in trading and you're not making money and you don't have a regularly rising equity curve, have a look at the Daniel code. We have something for everyone. We have monthly signals that you can subscribe to on a monthly basis, get your daily trade signals every day. We have a whole lot more than that. And I've got something super exciting to show you a little bit later on today. This is Frank's article. It's called Time on Our Side, and it's up on the website now. I do really suggest you read it. It's full of wonderful, wonderful information, and you can see some of this as we go through. So I've headed this webinar Truth from Daniel Code because back in at the highs in January 2022, those who were following Frank with his weekly commentary called The Fourth Seal was telling you pretty soon after that high that that wasn't the final high, that indeed there would be a correction and there would be a new all-time highs. And that sounded pretty preposterous a few months after that January high as the market started to head towards the correction. But was absolutely right. He's telling you here how he knows these things and what he does. And here he says specifically why the top early 2022 was not the end of the bull market. And he's talking there about those cycles, which you can read there. And those of you who've interested, go to the articles tab on the Daniel Code website. When you finish reading Frank DB's article, you can read one I wrote a few months ago called The Other Way, which talks about much the same over these dominant time cycles. And he's quite right. He says, I know there was war and inflation. I know nobody believed the possibility of new highs, but I also knew that only the right DC time cycle setup can end this bull market. And he's just proven to be spot on there. And of course, the past forecasts the future, which is why subscribing to Frank's weekly commentary, where he provides you with the charts, that's so important. And as he says here, we don't know the future, but we do have some clues. In fact, Daniel Code charts are full of clues. You just need some knowledge, skill, and lots of belief to read them. And you should read Frank's commentary on those charts that he provides you every week. He's indeed become a very skillful man. And it's wonderful. Frank came to me back in 2011. He was a young man. He's probably still a young man, isn't he? It's not that long ago. And he brought his fiancée, Anne, with him. They're now married, and a couple of children, two at least that I know of, Frank. If you had more, you've neglected to tell me. That was the first year that I taught the Fourth Seal at a tutorial in Taupo, New Zealand. Wonderful Taupo, gorgeous place. I'm going to say sorry I ever left. Can I say that? I don't want to offend anyone, but oh boy, it was nice. And we had a beautiful house right on the lake, literally on the lake. Wonderful, great big lake. It's a sunken volcano. And it's 1,000 feet deep, beautiful fresh water. It's just below the snowfields at Ruapehu. Anyway, what was I talking about? I see. Obviously nothing that important. We'll get to it, I guess. This is important here, folks. This is one of these charts that I developed years and years ago. And these are not linear charts. These are angular charts. And what we're doing there is we're taking the Daniel Code ATR, average true range spreads, and we're showing how these markets actually move on this angular chart. Those of you who've been with us a while will remember that periodically I show you the Danielcode 24-day chart of US T-bonds running from about 2000, and it has been absolutely incredible. And with the collapse in T-bond prices last year, we were charting those numbers down every hop they made, and they're amazingly accurate. But you can see here Frank's actually given you the next three important dates here, and he's concentrating on the 59-day cycle. And you can see, make a note of those, folks, because read through his article, you'll get all the detail out of that, which is very important. Okay, so we're just going to have a look now at our Danielcode algorithm number 1. Now, remember what I've been telling you, algorithms is just a fancy name for an equation. And basically it's an instruction that tells you what tools to apply and in what order. And if you put it in a computer program, you can call it an algorithm, which is much more sexy than telling you it's a trading program. But we've been running this now for a couple of months, and we're starting to see some interesting stuff out of it. One of the things we're seeing is that the Forex are very, very good. This is Euro USD. We only picked two markets to show you on these algorithms, and this has been very nice. This is a slower way of trading. It's for people who don't want to be in and out of the market every day. This is a wonderful way of trading, and the Forex has been the outstanding market here. This is dollar yen, US dollar Japanese yen, and this is a fairly small market in terms of dollar value. But look at how much money it made, 5,600 on that run down into the January low. That's pretty stupendous for the size of this market, and a nice rally going on now. T-bonds, US T-bonds. This is interesting because it had a flip me, which I've talked to you about, and this is the first one I've shown you in the algorithms. We call this Danielcode algorithm number 1. Don't hold your breath, or better still hold your breath. I'm going to show you the latest algorithm very shortly, which should, I expect it to blow your socks off at least, maybe something else as well. Okay, so this is T-bonds. It's done very well. It's had that one little loss in there. It's made money 3 of its last 4 runs, and very nice, very smooth. Let's see what else we've got. Soybeans. Soybeans is on a bit of a tear now. It's making good money, but you can see it's had 3 losing setups beforehand. Now, I'm not showing it to you here, but once you know how to trade algorithms, you will never risk more than 1 ATR. ATR stands for average true range, and we take that. All of your trading systems have a tool for that, and I think the default is usually 7, which is too fast. I use 29 days or 44 days. So we want to be responsive to the movement in the average true range, but we don't want to be jumping in and out all the time as markets move around. So where we've got losses here, remember, if you know how to trade Danielcode, you're never going to risk more than 1 ATR anyway, which is a much smaller amount than some of these losses is showing. This is gold, which is doing pretty well again. It runs up some money pretty quickly, doesn't it? $6,000 in the last couple of weeks. That's a good one. This is the Russell, and this is another one that had a flip me buy here. For those of you who don't know what a flip me signal is, let me tell you, it's essentially a Danielcode trade signal, and all of the Danielcode trade signals are so powerful that every trade signal that comes to you has an entry point and an initial protective stop loss. And they're so powerful that if that protective stop loss is breached, it's telling you that you're wrong. You're wrong, and you've got to do something about it. And what you've got to do is do a flip me. If you're short, you're going to go long. If you're long, you're going to go short. And I've talked about that a couple of times earlier, maybe late last year, in the webinars, which are all available on the website for you. So there's the Russell. That's pretty nice. This is the NASDAQ, which of course has been absolutely enormous. You can see a $27,900 trade in that run up, then a bit of a correction, then another 12,100, then 2,500 going down, and it's now sitting at about 1,100 today. So it's been a star. And of course, once you get these big trends, the money just adds up really, really fast. This is a good example of it, folks. This is natural gas, which is on rollover today. And it had a nice $7,700 trade down into the low in late December, early January, actually, I think. It's now up 4,400, and it's now elected its sell signal. How this works is you get the color change, and then if it's a buy cycle, if that high is taken out, you should buy. If the other way, you can see an example here. A change of color to the pink means that's a low cycle or a down cycle, and if that low is taken out, you should be short. Okay, this is Beans that is having a bit of a run along here. It's had a few losses before it got its act together, and these are all done at Wednesdays. These don't have Thursday's prices on them, folks. It's very nice. And we've got Bitcoin futures in here and Ether futures. I have to say, on the basis of an algorithm, they're doing badly, very badly. Essentially, this market's now sitting at about where it was in December, and it's been up and down and up and down, and it's not really liking this algorithm at all. So we'll have a think about that. We may not continue with that. And I know that we have now a reasonable number of clients in Europe, and the three markets in particular I want to talk to you about is the US dollar index, sugar, and coffee. And they're not on the CME, they're on the ICE exchange. And for you European folks, you might like to have a look at those markets. I know if you've got a CME account, it's difficult because you've got to have a separate account to trade on ICE and likely different brokers as well. But for those of you who are able to look at these markets, they're very, very good. This is enormous for a small market like sugar, $5,500 on the run down. Just wonderful for a market. It used to have a margin of $500 when I started covering it. It's about $1,100 now. Very good market. Have a look at this. This is a US dollar index. Hasn't been too bad. Nothing really sensational, but nice. And getting a nice little run up again now, which is good. Here is coffee. This has been a wonderful trading market. This runs up the dollars very, very quickly. For you folks in Europe in particular, do have a look at these. These are on the ICE exchange. They are not on the CME. Okay, so, excuse me, talking about creating and trading the Danielcode time signals. Do go back over some of our previous webinars. We've been honored to have had Greg Palladini, who's a super trader, wealth manager from California. We've had him on to talk about his Danielcode trading. We've had Mark L. on to talk about his paper trading and now his live trading. And the trading of Danielcode time signals is what makes the big money. And when I'm talking to you about guys who've returned 500% in 8 months on wheat, 800% in natural gas, 1,000% for a year paper trading natural gas. Remember that learning to trade time, create and trade time signals is only available at the Danielcode tutorial. And honestly, if you haven't done it yet, you're dedicated to poverty. There is nothing like it. The more I see of it, no one is more amazed by this stuff than I am. But the opportunities to make big money are just absolutely amazing. And if you're not part of that, you should be thinking really seriously why you're not, because we've had enough people on telling you how they've gone, what their expectations were, how they've overachieved with those. It's an opportunity that's sitting there for you. I'm going to show you a bit more of it today. So what I'm going to show you now is what I promised you, the new Danielcode algorithm, which is algorithm number 5. In effect, it's an advancement of trading daily time signals. If you like, it's trading daily time signals with a couple of filters that keep you in the trades longer. And what you're going to see is really, really interesting. I'm using the 067 back-adjusted continuous chart here from Trade Navigator. And those of you who've done tutorials know that I tell you never to have anything to do with the 067 charts because they absolutely disrupt the price targets. But for this particular exercise, I wanted to get rid of the gaps on contract rollover, which it does perfectly with the 067 chart. So there's your S&P back-adjusted continuous chart. If your trading page looks anything like that, with nothing else on it, you're in trouble. You're in big trouble because the joy of it all is sitting there smiling at you, as I'm going to show you. So take a look at this. Welcome to Danielcode algorithm number 5. At this stage, it's simply a trading program. It's very closely related to trading time, creating and trading Danielcode time signals, which those of you who've done tutorials know all about, and it's added a couple of filters to keep it, give some weight to it. And the very interesting thing about this is you can see from the blue note just at the top of this chart, this is trading an ATRTK 2.296. In other words, what we've done is we've taken the average true range as it changes, as it expands and compresses, and we've taken that average true range and we've basically said as a proposition, if the market keeps working, it can go up, it can go down, it can move about, but as long as it's maintaining some relationship to those settings that we're using, and here at 29.6, for those of you who are new to us, that's the Danielcode calculation of time. In the Danielcode lexicon is 29.6 days, which is also the length of a synodic month. You can look that up in Wikipedia or Encyclopedia Britannica, whatever you wish. And a synodic month is basically the average length of a calendar month. We have 28, 29 days, 30 and 31, but 29.6 is the length of a Danielcode. That's Danielcode time for a day, and the length of a synodic month is 29.55, so 1/10 variance. In fact, there's no variance because some years ago, I think it was in 2011, NASA Jet Laboratories did an analysis of all of the synodic months right through the year. And what they found is that the synodic month varied from 29.3 all the way up to 29.8 days. And within those two numbers, each month individually varied a bit longer, a bit shorter. So if you say 29.5 is the length of a synodic month, you're right. If you say 29.6 or 29.7 is the length of a synodic month, you're also right. So there's no need to twist yourself over about it. That's what it is. So what you've got here, these two little blue lines you can see are generated by the computer and what they're doing essentially is they're measuring the average true range on a graduated scale, but based on 29.6. And what they are doing is then, if you think about your Danielcode trading channel, those of you who've done a tutorial, it's the same thing. You've got 1 day period above the mean and 1 day period below the mean. This is a way of expressing that continuously on a chart. And if you look at it in terms of signals, have a look at this. This is the S&P from May last year. So 9 months, isn't it? February, March, April, May, 8 to 9 months, something like that. Have a look at it. Extraordinary, isn't it? Look how long those cycles are running for. And what's really interesting, as you're going to see as we move on to an earlier period of the chart, is that when the market is confident, it doesn't create so many signals. When the market is not confident, or when it's getting a bit twitchy, like now, for example, it starts creating a whole lot of signals. So you can see where those signals were generated there. And now you can have a look at the money in it. Have a look at this. 16,000 up into the first sell signal, 4,700 down, 1,700 up, 10,900 down, 2,800 up, 6,500 down, and then look at this, $25,200 in this huge, massive run-up into Christmas. Extraordinary. They're the sort of numbers, Greg, you'll know, we saw those sort of numbers on the NASDAQ. Now with this new algorithm, we've got the S&P outperforming anything, although I have to tell you that this is so new. It's been tested largely on the S&P and on UST bonds. So this is what comes from this new algorithm, and if you take that and lay it on top of your daily time signals, you'll see exactly what's happening. This is another period of chart. This is March to December 2022. Same thing. Here's the new number 5 algorithm, and let's see what it's doing for you. You can see it's creating buys and sell signals, and a whole lot more of them. And that's pretty normal, because the market is seeking direction there. It's not terribly confident in what it's doing, and it's constantly going back, either back up or back down to find support or resistance. That's exactly how markets work. They go up to support and resistance and down to support or resistance. And when the market's a bit tremulous about what it's doing, it creates more of these signals. When it's confident, as you saw on the previous chart, it'll let it sit there for a long, long time. So those of you who haven't already done a Danielcode tutorial, or those of you who haven't done a Danielcode tutorial recently enough to learn how to create and learn time signals, this is for you. There's a link there for you to see the curriculum I offer on Learn to Trade, and this will make you a super trader. Those people that we've been talking to, as I said, Greg Palladini, Robin, other people making 500, 800% paper trading, what have you. This is what they're doing. They're trading time signals. And Mark L was with us recently, and was kind enough to tell us how he had done his paper trading with a very, very strict interpretation of how to do it to make sure you're not cheating the system, because if you are, you're only cheating yourself. So do it the right way. And he says, I've said it before and I'll say it again, the Danielcode and John Needham have changed my life. Now, Mark's a very down-to-earth guy. He's an engineer by profession. He's been heavily involved in business all his life, and he's a very sober citizen. But he learned the Danielcode time signals. Then we had to teach him a bit more of how to keep him in the market, because he's a nervous trader. He shouldn't be being an engineer. He should be a very logical trader, but emotions get in the way when you're talking about money. And we managed to get him out of that. And he's trading very well, of course. And Greg Palladini For those of you who haven't already, do go to the forum and find the link that says Danielcode Trading Tutorial or something like that. And Greg Palladini's been a Danielcode member since 2015. And in 2016, he did a live tutorial with me in Los Angeles. At that stage, I wasn't teaching trading time. I was only teaching trading price. I hadn't broken the code for trading time. But then, excuse me, Greg came back a few years ago and did another tutorial wholly to learn about creating and trading time signals. And he hasn't gone back. He's just got better and better and bigger at it. He's a wonderful guy, so generous that he said, look, I'm going to do this time tutorial and I'm going to post everything that I find out about it, good or bad, in forum, so folks can get a completely straightforward, unabbreviated view of what the tutorial was like, what it offered, what were its strengths, what weaknesses, if any. And as he says, what a week. The DC continues to provide the confidence to trade big, while the great unwashed still trade on the news, clueless as to the DC numbers. That's right. So there's a whole lot of endorsements on here, folks. What it requires is for you to take the plunge, get on and do it every time and every day you're not trading Danielcode, you are dedicating yourself to poverty. The answers are here, all of them. Here's UST bonds to show you a completely different chart. And this goes down at the low in October 2023. Have a look what Algo number 5 does to it, which, as I've told you, at the moment, this is a pure trading system. It's going to take a little bit more work to actually put it back into the computerized system. But I can teach you this as part of your tutorial if you think it's amazing. And if you don't, you should. Have a look at this. This is UST bonds, which is not known as a massive earner generally. Have a look at this. You've got a $3,000 run down, then a 2,000 run down, then 9,500, then another 3 into the low. Then it takes off. You get a run of $15,200 up into the next sell signal. Absolutely extraordinary. That whole run started in early November, and off it went. And then the present run down $3,000. It's all there. It's all for you. So start your Danielcode tutorial now. It will teach you everything worthwhile about creating and trading time and price signals and make you a super trader. And if you start your Danielcode tutorial before the 31st of January and you're in the first 3 people to register, I'll teach you how to trade the Danielcode Algo number 5 as well as the full tutorial program. And our Learn to Trade offer is here. You can see where the link is. Email me today to reserve your place. I should say. You need to be in the first 3 to get that particular offer. Now, this is what the market did today. And this is actually taken at about 3 o'clock, 3:30 this morning, a bit before the close. So these charts are not exactly accurate, but the one I'm looking at here is, this is the US dollar index. Why did it have that correction? Look at the previous day, Wednesday. The close on Wednesday, remember, Danielcode target recognition, as we call it, is valid at the bar, high, low, or the close. And I know I go on and on about this, but it's so important. It's so valuable. However you are trading, if you know nothing else, go to the Danielcode members charts. They're published twice a week at the website. They're not expensive. Get the numbers, put them on your chart. Look for target recognition. Right here you can see that on Wednesday, the US dollar index had a high of 103,450. The blue line is there. Look at it, 103,450. That had been on the chart for weeks. And have a look just at today's bar, because target recognition is valid at the bar, high, low, or the close. And the close today, 103,185. Where's the next blue line? 103,165. Just barely a hair's difference. That's target recognition. What's interesting is that target recognition doesn't mean you're going to get a turn straight away. But if you put it the other way, you can say that without target recognition, you are very, very unlikely to get a turn. In fact, statistically, without target recognition, you're talking in the region of a 4 to 6% probability of getting a turn. So having target recognition is the vital precursor to any trade. Okay, let's keep going with this. And our next chart I'm going to show you is the S&P. Why did we get a turn today? Well, we had a buy signal there, of course, Danielcode buy signal. But have a look what happened yesterday. This is Wednesday's bar. The close on Wednesday, 4769.25. Have a look at the red line, 4770. 3 ticks variance from target. That's target recognition. And that gave you one of the biggest reasons we had a buy today. The next one, I think, is gold. This stuff is all vital for you to know. Look what happened. Why did we get a little nothing bar today? Well, this market's been trying to fill the gap. If you look across to the left, you can see there's a bar there that has a big green line underneath it. That green line is to highlight that there's a gap. And what the rules say is that if the chart low, which is the low you get when you put your cursor on the bar, is greater than yesterday's close, then the true low is yesterday's close. So that true low is down there at about 1997 to 2000. I can put a cursor on it and tell you exactly if you like. And here we are, it's that close there. Back on December the 13th, and that close was 1997.3, and the market's been trying to find that number, and it's been running through its Danielcode numbers as it gets there. Have a look at yesterday's big bar down. The day before was target recognition as well. Yesterday, the low was 2004.6. The close was 2006.5. Have a look at the blue line there, folks. 2005.5 against the low of 2004.6. 9 ticks variance. Nothing. It's not even as thick as a human hair. That's what makes markets turn. Here is copper. This is a bit more interesting for you because we can see that we had target recognition. It's been trying to find target recognition for days. On Friday, it actually had target recognition. The close was 373.50 against 374.30, and it went through a little bit, didn't it? And then yesterday it was trying to find a number, and it couldn't. But it's been searching for 3 or 4 days to find the number. Look what it does today. It opened right on the blue line. It opened at 374.40. The Danielcode blue line was at 374.30. 10 ticks there. And this thing moved in 5, so that's really 2 ticks. Down it went low today, 371.45. What was our red line saying there? 371.65. Same thing. Handful of ticks difference. That was all. That was what the market needed to turn it around and shoot it up. And this chart here, which as I say was down an hour or so before the close, looks a bit more bullish than it actually was. But today's close in copper was 374.50, again right on that 374.30 red line. Pretty amazing, isn't it? So this is natural gas, which is on rollover today, folks. Be aware of that if you're into natural gas. Look what it did yesterday. Yesterday's close, yesterday's low, I should say, 2.402 against the Danielcode blue line of 2.403. That number has been on there for at least a week, maybe longer. And it's created entirely by the high, which was back in January the 9th. And so yesterday's low, you think of the market trying to find its Danielcode number, Tuesday's low was 2.409 against the blue line at 2.403. Yesterday's low was 2.402 against the blue line of 2.403. And today The blue line, the bottom of the line went straight through, but look at the close, 2.417, sitting against that same number, 2.403. And that's just searching for a number to give it so it can make its turn. Here's soybeans, which has had a bit of a wriggle on the last few days, given us a very decent trade. Way back for us on Friday last week, January the 12th, the low of that bar was 1203 correct 0, that little arrowhead that you see in the old CBOT charts. It's called a correct. And that low was 1230 correct 0. And let's have a look, where's this blue line? It's sitting here at 1201. Okay, so the low before was 1203 0 against the blue line of 1201. Pretty close, isn't it? But not close enough for Danielcode. Look what it did today. The low today, 1201.0 against the blue line, 1201.0. Zero variance from target. Does that happen often? All the time. All the time. And that is what gave you that key reversal bar today, which may find some legs tomorrow. We've got silver as the next chart to look at. I hope you're understanding what I'm trying to show you is that markets will not turn in a factual sense without target recognition. Here's silver. Have a look at yesterday's close. Well, it's a bit like the last chart we looked at Thursday last week. You had perfect target recognition. On Wednesday, we had a close at 2267, 2 points away from the blue line. Look what happened today. It breaks through that line, it goes down, turns around, does a key reversal bar, and it's off. That's what happens when you've got target recognition. Very, very important stuff. You should know that stuff, folks. And I think this might be the last of them. Wheat, I hope I haven't bored you with this. It's so instructive that here you see this market was looking for a low on Tuesday, couldn't quite find it, put in an inside bar on Wednesday with a low of 577 correct 6 against 578 correct 2. Look what happened there. It broke through two of the blue lines, made its low at 573 correct 2. What's the blue line number? 573 correct 0. 2 ticks variance. That's nothing. And these numbers, as I say, have been on the chart for weeks and weeks and weeks. And you can go to the members' charts at the Danielcode website and have a look at them. You'll see these numbers have been on for quite a while. And that's what Danielcode does all the time. And it's quite amazing. And off it goes. US T-bonds, and I know this is the last one of this series for you. Have a look what it's been doing here. It's been trying to find support. It's been trying to find a Danielcode number. Wednesday, its low was 120 correct 12 against the blue line. A little below that at 119 correct 2. Look at today's bar. Burst through a couple of blue lines, but it puts its close at 119 correct 31. And look at the blue line, 119 correct 29. 2 ticks variance on the close. And that, folks, is target recognition. And you need to have that as the first priority of what you're looking for all the time. This is a chart of gold, and I've shown you this on many occasions. And you can see here that all of these highs and lows, which appear to be random, there's nothing random about them. All of them are happening at the expiration of a Danielcode time cycle. And that's the power of time, which Frank is talking about in his article as well. Absolutely vital that you understand that. There is so much money to be made to creating and trading time signals. It breaks my heart to think of the number of you that love trading and are not making any money out of it. I was in that position. I was obsessed about trading, absolutely loved trading, and could never get a nice evenly lifting equity curve. which is why eventually, after enough frustration and not inconsiderable expense, I was forced to find the Daniel code, and it was revealed to me, and it's absolutely marvelous, and you can share in that gift as well. Okay, better still, take your Daniel code tutorial now. And a few months ago, as I told you, we had master trader Mark L returned greater than 800% in his paper trading exercise, which sounds incredible, which sounds extraordinary. And I know that the vast majority of skeptics don't believe it, but we've had Mark L do it, and he's not only done it, he's come on to talk about how he did it. He's been totally open about everything. And then we've had Greg Palladini say the same thing. We've had Amy and Scott say the same thing. We've had Robin say the same. We've endlessly got people saying that they are getting those sorts of returns. And I'm so confident in our program that teaches you to create and trade Daniel code time signals that when I ask you to do your paper trading of the whole of calendar 2016 of natural gas, if you don't get within 10% of what Mark L returned, I will give you your money back. I can't be more open than that. Now remember, we're talking about paper trading. It has limitations. Mark told us exactly how he did his paper trading, and if you do it that way, where you have a tool on Trade Navigator that will show you the bar where you want to start, but it will not show you the next bar until you tell it to after you've placed your order. If you're completely honest about it, it's as close as you can possibly get to real live trading without risking the money. So very important, folks. I don't see those emails rushing in, but the special deal's only for the first 3, so you better email me now if you want to do it. If you have not already, folks, please help yourself to a free trial where you'll be able to see everything that we do at the Daniel Code, including Frank DB's wonderful weekly commentary on gold, crude oil, and the S&P. Very important. Finally, this is our standard disclaimer. You should be aware that it is very easy to lose money trading if you don't know what you're doing. By the same token, it's very easy to make a lot of money if you do know what you're doing. So for goodness sake, get yourself trained, understand markets. Markets are there to help you and reward you. That's why markets exist. That's their sole purpose. But you have to understand their language, and their language is Daniel code. At last week's webinar, I actually talked to you about how markets are talking to you, what they're saying, and how you can realize what they're saying to you to help you with your trading, and it's quite wonderful. So please do not risk real money until you are confident that you are a competent trader. It's a wonderful game once you're good at it. It's a horrible game if you're not. So get yourself educated. The best education is take the Daniel Code tutorial. Yes, it's expensive, but it gives you so much that there is nothing else to compare. So that's us for today, folks. We've been a little bit shorter than usual, but it was wonderful to have you with me. Do go over this webinar again and think about that wonderful thing which we're calling Algo number 5. It's basically a derivation of creating and trading time signals with a couple of filters to just give it some added stability. And that's all for me for today, folks. Enjoy your weekend, and I'll look forward to seeing you at our next webinar. We go forward with Leslie and John. I'm ready in Panama. Michael, anytime you like. I will. We can get you set up any day next week. You want to have a tutorial? Just Michael's doing a tutorial. He wants his next lesson. Just send me an email, mate. Tell me what days are available for you, and we'll get you set up straight away. Okay, all the best, folks. Thank you for being with me today. I hope you've learned something, and I hope you're ready to act on it. That's the important thing. So good night for now. Bye-bye.